Our next presenter is Stephen Simmons. Stephen was a research analyst at Tudor Investment Corporation, where he built and managed trading systems with tens of millions in assets under management. Later, he was CTO at AG Squared, Director of Technology at Ideal Lab, then American Towns. So with more than 30 years of success, he's a veteran in the world of quantitative finance and internet technology. Now the founder and CEO of WaveBasis and the platform's oldest active customer, Stephen is on a dedicated mission to advance the science of Elliott Wave analysis and serve the Elliott Wave community with the best tools possible. Over to you, Stephen.
Hey guys, Stephen Simmons here from WaveBasis. Thank you all for coming. And Jody, as always, thank you for hosting this great event and for inviting us back again, inviting me back again. So welcome to Elliott Wave Hub Summer 2024. Today, as you see up on your screen, we're going to cover these topics. We're going to talk a little bit about grounding, which really is meant to address sort of frame of mind and mentality approaching Elliott Wave analysis and trading in general. We're going to do a quick tour of WaveBasis, and then we're going to dig into some of the specific steps to apply Elliott Wave analysis that can be applied to these steps can be applied to any market. And as part of that section of my talk, we're going to talk about how to identify potential trading opportunities once you've established, as I'll talk about in a minute, long-term wave count context. And then we'll dig into some actual charts and look at some current wave counts that I'm looking at. Several of them will be updates from previous Elliott Wave Hub events and other webinars that we've done, and some forecasts. So let's dig in. So first, some grounding. What do I mean by grounding? And I said, here it is, let's get grounded. First, it's important to understand and really internalize that trading is a game of skill and probability. It's not random chance. A lot of traders, especially newer traders or people who don't have a lot of experience navigating markets, tend to assume and approach trading as if it's a game of chance. You tend to, it's easy to look at a chart. It's a squiggly line on your screen, and you haven't. And first, I should say, I say this at the beginning of every one of my presentations, so I apologize if some of you have already heard this or seen it in our past videos. But I really think it's important, especially for folks who haven't heard it before, to internalize this idea that it's easy to look at a screen and see a squiggly line of bars or candles and think of it as an external, some sort of external abstract thing that's happening that you're trying to predict this in a similar way as you might approach predicting a roulette wheel or some other game in a casino. It's important to understand that that's not what you're doing. The squiggly line on your screen is actually a measurement. It's a measurement of the sentiment of the market participants. So what do I mean by that? As I see here, markets are driven by human sentiment and their activity. This is a real world phenomenon. And so what do I mean by that? Markets go up because enough people think they go up. So if enough people think Bitcoin or Apple or any other market should go up, it will go up because people will buy it up. They'll want to pay for it. There'll be demand. It's a supply-demand a phenomenon, just like any other market outside of financial markets. So when we see markets going up and down, on a chart, what that chart is telling us is how people feel about that particular market. It's not an external quantity. This is not a gambling game. It's a game of skill. What Ralph Nelson Elliott observed is that this flow of human sentiment and activity in markets evolves in repeating cycles, or what we now call patterns. And there is, just like in many other aspects of our world, there are ways to predict what large groups of people will do in terms of cyclical behavior. Advertising works this way. Political cycles. We all live and are bound and are acting according to seemingly chaotic life, but it's moving in cycles and patterns. And Elliott noticed these patterns in markets. So this is how Elliott Wave analysis was born. So Elliott Wave analysis itself provides a framework to observe, measure, and use these patterns to forecast markets. If you have part of a pattern that is completed, there's generally a high probability that the rest of the pattern will continue to complete. And Elliott Wave analysis helps teach the skills required to measure these patterns. And also part of the skill of trading, I should mention, is not just predicting which way the market will go. And this is one of the kind of misconceptions and a lot of new traders come into trading with, is that if you can predict which way the market's going to go, you're all the time, with some reasonable amount of statistical success, you're going to do well. Well, there's more to it than that. There's trade management and risk management. These are all skills that you have to learn in order to be a successful trader. It's not just putting a bet down on a table. What's unique, or one of the unique things about Elliott Wave analysis, is that not only does it give you the skills and a framework to measure the patterns, which can help you formulate forecasts, it also provides elements that help you with the other skills that are involved in trading. With risk management, trade management, patterns themselves suggest potential stop levels, profit-taking levels, and so on and so forth. And where does WaveBasis come into this? WaveBasis helps you identify these patterns by automating the process of detecting the patterns in markets. It thereby helps you understand the relative probabilities between different wave counts or different interpretations of the patterns. And it includes tools to help you master and apply the skills that are inherent in Elliott Wave analysis itself. So I think this is important in terms of having the right mindset going into trading. Okay, so now we're getting into some specific steps to apply Elliott Wave analysis to any market. One of the big questions, especially again for newer traders, is, okay, I see all these wave labels 1, 2, 3, 4, 5, ABC. How does this work, and where do I start? Well, the best place to start for any market is to first establish a long-term wave count context. Anything that's happening in the short term, if you see a market, over the last couple of days, if you're watching a 15-minute chart or something, you see a market going up and down and sideways, that's happening as part of a larger context. It's not happening in isolation. These patterns exist, as anyone, most of us probably already know, exist at all time frames. So it's important to understand that the market action that you're seeing in recent time is actually part of a larger pattern. So first, getting a sense of an understanding of that larger pattern before focusing on more recent, faster action is really important. So we'll look at how to do that. As part of that process, you're always going to want to consider alternate wave counts. There's, for any section of a chart, they're generally going to, any section of a chart at any time frame, there's generally going to be more than one way to interpret the wave patterns. So it's important to consider alternates, and WaveBasis provides tools to help you with that. Then you're going to want to decide on your trading time horizon and use tools that I'll talk about in a minute as we do a quick tour of WaveBasis. You use tools like count subwaves and timeframe drill down. These are names of specific features in WaveBasis to refine the wave count at smaller time frames according to your trading time horizon. So take a quick look at WaveBasis. This is WaveBasis. It looks like a lot of other charting platforms, and it contains I won't go into too much detail here, but it includes the features that you would expect from a charting platform, more than 100 indicators, various drawing tools here. But what I want to talk about, I have a window here that's blocking me. Move that. I don't know if you can see it, but it's blocking me. WaveBasis also includes some unique tools to not only help. It's essentially, one way to look at WaveBasis is a toolkit for Elliott wave analysis. There are tools that are specifically designed to help with common tasks that Elliott wave analysts tend to need to perform as part of their work. In addition, so in that way, Elliott wave analysis is great for people who are already very experienced with Elliott wave analysis, are comfortable evaluating patterns, and there are tools to help them do their work. On the other end of the spectrum, where there may be people who are newer to Elliott wave analysis, who are still learning the patterns, who are still learning the thought process of evaluating wave counts and finding trading opportunities based on wave counts. There are tools included in WaveBasis to help with that. So let's talk a little bit about some of these unique tools, and then we'll get right into the more juicy market stuff. For example, we have the alternate, and we're looking now at the USD dollar peso. We'll talk more about this chart in a minute. With any automatic wave count that you run, WaveBasis will give you up to 4 alternate wave counts to quickly compare. We'll talk more about that in a minute. Also, WaveBasis makes it easy to interpret wave counts quickly to see where potential trading opportunities might lie. For example, we call this the next subwaves. So based on any wave count or any wave pattern, really, we can look at what, based on the projected target for the next wave in that pattern, you can see, well, is there a potential trading opportunity here? There's an indication of the risk reward. And these are all pattern-based. It's the pattern-based risk reward, reflecting on what I said at the beginning. The patterns themselves can help you define stop levels and profit-taking levels, et cetera. And that's what we're seeing here. So this is a quick way to, again, especially if you're not yet comfortable in looking at wave counts and seeing just visually where potential trading opportunities might be. This is a quick way to get comfortable with that. Additionally, with every wave count, you're given a written description of how to interpret that wave count with short-term, medium-term, and long-term projections, forecasts for the particular wave count. So this, again, is really helpful as you're learning how to interpret wave counts. Again, another sort of basic tool is the we call it the interactive wave guide, which tells you the essential rules and guidelines for each of the Elliott wave patterns with an idealized example of each of the patterns. And this is also linked to your chart, so you can hover over any pattern in a chart and see what what pattern it is and what the rules and guidelines are associated with that pattern. So really handy, really great for accelerating your work. Then we have a tool called the Wave Scanner that allows you to search for, scan a list of symbols to find specific trade setups that you might be looking for. Maybe you're looking for, you'd like to trade wave 3s, which is very common, and obviously in Elliott wave analysis circles. You can scan for those, or maybe you want to scan for wave 2 so you can get prepared for a potential wave 3, so on and so forth. And we have a lot of information on the website and the blog about how to best use the scanner. Maybe you can post that link to how to use the blog post about how to use the scanner. A lot of people have benefited from that. Okay, so let me click quickly back to, So that's a quick tour of WaveBasis. Lots of tools. One of the things that I'll talk more about the smart tools later. What you're seeing here in these colored boxes. So let's just jump right into this just to remember where we are. We're going to establish a long-term wave count for overall market context. And I've already done that here, but I'll show you where this came from in a minute. So what we're looking at is the dollar peso, the all-time history. And this is where you should start with any market to understand what is the overall pattern that we're dealing with before we dig into lower time frames and more recent history. So from the beginning of this instrument, we can see we have 5-wave move up. And the reason I use this as an example, because it's such a beautiful textbook example of what a wave count in its ideal form looks like. Both in terms of its overall structure and timing, but as we'll see in a minute, it's a great example because of the internal structure from a probability standpoint. And I'll show you what I mean by that in a minute. So maybe it would be helpful to simplify this chart a little bit. Yeah. So what we see here is we have a 5-wave move up followed by a 3-wave move down. This is the basic Elliott wave cycle. It's called, sometimes referred to as the 8-wave cycle. And this is the cycle that Elliott observed repeating through markets at all time frames. So this is what we're fundamentally looking for as Elliott wave analysts. This is the basic pattern that we're looking for over and over and over again. And within this 8-wave structure, there are trading opportunities. Whether you're trading long on this side or whether you're trading short on the correction. In this particular case, as I said, this is again a very textbook example. I just love it. Now I should say that not all markets will be this clean and textbook, and that's where it can get tricky. But the rules and guidelines of the patterns all stand firm, whether you're looking at a very clean wave count or not, and you can use those to judge how solid your wave count is and how much reliability your forecast will be. So in this case, and this is where I'll talk about the smart tools and WaveBasis. One of the other aspects of WaveBasis, one of the primary goals of WaveBasis is to accelerate this process. That's why we can get automatic wave counts, valid wave counts as a starting point rather than starting with a blank chart. Another aspect, another feature that helps to accelerate the process are the smart tools. And there are several smart tools. We can see them listed here: smart support resistance, smart fibs, smart Elliott wave channel, so on and so forth. What I'll show is, for example, most people have used Fibonacci drawing tools, extensions and retracements, and you know that you have to draw the points and then you see the fib levels. In WaveBasis, you just have to hover a wave to see where the fib levels are for that wave. And it knows if you're hovering a wave 1, you're looking for retracements. If you're hovering a wave 2, you're looking for extensions. So it just saves you time from having to draw the fibs yourself. And it's for me, I'll say this, and this is actually something that I never really considered when I came up with the idea of smart tools, is that when it's so easy to see the fibs, you end up learning a lot more about markets. If every time you want to see, if you want to quickly look at, where are we in terms of the fibs on a particular wave count, if you have to go and draw these fibs, you're just not going to do it for every wave. And so this, you end up, you accumulate knowledge by, particularly if you're focused on a core set of markets, which I tend to recommend, because you gain familiarity with the play that a market will have in terms of its patterns. You gain an understanding, an intuitive understanding of the personality of the people that are participating in the marketplace. Is another way to put it. So anyway, so I would you know, by over and over again seeing fibs, you know, for example, I know that most markets. I won't get into all that. Let me just let me stay focused on what I'm focused on. Excuse me, focused on the tools here and the dollar peso. So this is just a quick mention about the smart tools. You see your Elliott Wave channels here, for example. Now, on this chart, again, the reason I like it as a sort of textbook example, what these colored boxes show us, in addition to the standard Fibonacci levels, is where is the highest probability spot for the next wave, and this is what, in fact, drives the next subwaves gadget that I referred to before. In this case, based on this 1-2 rally then correction, we would statistically anticipate that wave 3 would be in this area here. Now we can see that it shot out over that area, but that's okay, because it's important to understand that these smart tools are showing us probabilities. They're not predictions. They're not saying, you know, they're not predictions. They're based on a big pile of data that tells us that typically wave 3 would be in this area. So how that, I mean, if it's not obvious how that can help you navigate, we would know that if we're back in 2016 that we're here, well, it's likely that if we're not already topped, that we're topping, and sure enough, we were at that time. So if you're considering buying here, probably not a good time to buy dollar peso if you're expecting that we're in a topping area. And sure enough, we topped. Then where were we expecting the wave 4 to be? Right there, and that's where it was. Where would we have expected the wave 5 to be? Right there. So these are really, really useful tools. This particular particular aspect of the smart tools, the smart support and resistance areas, are really useful for gauging probabilities, probability of topping, probability of bottoming, and this is important information, obviously, if you're trading. Again, and then on the downside, so that's how we could have anticipated turning points in this long-term rally. Same thing on the downside, based on, you know, once we had gotten some confirmation that we had topped in this 5-wave move, we got a drop here, we would have been looking for wave 2 in this area here. Once we got our wave A, wave B, then we would have been expecting wave C to be in this area here. And so when the smart support and resistance areas overlap, this is a way to capture what is commonly known in the Elliott Wave world as confluence. When confluence is defined as when next wave projections at multiple degrees overlap. And that's what we have here. So we had confluence at 1, 2, actually 3 degrees. But once we had this wave C forming 1, 2, 3, 4, 5. Once we had the 4, we would project that wave 5 would be in this green area. And so here we have a confluence where 3 wave degrees are overlapping in this little strip here, and that's where it bottomed. I don't know if it gets better than that. So since that, and I should say as a personal note, dollar peso might not be the most popular forex instrument to trade, but for me it has personal significance because I lived part of the year in Mexico. So I have been using this chart for years to help with real estate decisions, other life and financial decisions. So for example, at this point, now I'm expecting, based on this wave count, that we are heading up in a wave 3 in the dollar peso. So I'm expecting the dollar is going to do really well in the coming period, in the coming months and years. expecting wave 3 to end up around $50. And this is useful information. So as I said, I've been tracking this wave count for years, but how do you do it? So let's start with an empty chart. And again, just reflecting on where we were. How am I doing on time? I usually have more to say than I should. We're going to, again, work through these steps. I just showed you the end product. Now that we're going to work through these steps in WaveBasis, starting with an empty chart. So we have our weekly dollar peso chart. We run a wave count, and that's the count I've been tracking. Not too much work to do here. And move this window again. And as I mentioned, we have 4 possible alternate counts. I won't go into too much detail about how to evaluate these counts, but there's the thought process. We've documented this, and there are tools to help you evaluate wave counts. And I've I've gone into much more detail on how to assess wave counts in other webinar videos that are on the website. Maybe Floyd, you can post that link too, or Maria, I should say. So these, the way that you read these, this list of counts is the first count is considered the primary count, and then you have up to 3 alternate counts, depending on how the probabilities shake out. These numbers here are what we call the similarity index. This is just at a glance view of how similar each of these alternate wave counts are to the primary count. And this is useful in the case where, for example, here we have sort of, I would consider these middle of the road similarities. They're not telling you too much, so you would want to look at each one individually. But for example, if these are all, in the 95% range, that tells you that 4 different interpretations of a particular market period and time frame are in general agreement about the forecast. This can be used to increase your confidence in the wave count. If, for example, we see some very low numbers here, we know there's disagreement. This is telling us the 4 highest probability wave counts for a particular market are in disagreement. This is should be interpreted as a warning to look more closely at each of the alternates and try to resolve the disagreement or wait for more data to arrive before making any concrete decisions. So let's look at these. This is our highest probability wave count is the wave count that I'm tracking up until this point here. And then we get a little bit of difference here. Let's see. So let's see what we see. This is showing us that we have a 1, 2, 3 up instead of 5 up. Could be, but based on internal, more detailed analysis, the 5 wave up scenario just works best. So let's look at, we have another 5 wave up scenario here that's showing us that the difference between these 2 counts, I don't know if you can see if I switch between them, we have a 1, 2, 3, 4 on this one, and a 1, 2, 3, 4 could be at least a wave 1 up there. So how do I advance my analysis? So as I said, decide on your trading time horizon. If, as in my case, I don't trade the dollar peso, I use it for life navigation. So in this case, what I understand is what I said. We're in it looks like, according to this wave count, that we will expect to look for some confirmation. Like I'll love it when we get up over the top of this B, because that will be the first early confirmation that we are heading up in a wave 3. But I'll say that, so if I'm a long-term trader of dollar peso, I'm looking at this. If I'm going to hold a trade for years, I may not need to do any more analysis. I may want to look for a pullback here before buying, but basically long-term, my analysis is done. I can sit back and put that in my retirement fund. If I'm a short-term trader, that's when we start to zoom in a little bit on smaller time frame. So let's first look at the daily chart, and use some of the tools in WaveBasis. One of the most useful tools, and one of the ones I use all the time, is the count subwaves forward. So we can count that pattern forward. And sure enough, well, let me delete it so you can see the whole thing happen. Waves forward. So let's just recount this and see where we end up. Well, that looks pretty great to me in terms of overall structure. We have overlap here. Some people don't like that, but I have a lot to say about leading diagonals, but we would consider this a leading diagonal. You can see that in the little pop-up window there. In addition to linking to the waveguide, we can see, if we hover this, we can see we're in a zigzag in the waveguide here. If we hover the rally pattern, we're in a leading diagonal. So based on this chart, if I'm a short-term trader, maybe a shorter-term trader, maybe I'm a swing trader. Maybe I'm looking for a trade that I can hold for days to weeks, maybe a month or two. How would I use this? I would project the pattern forward. Well, in this context, we're going to expect a wave B to finish somewhere up here, then the wave C to finish somewhere down here. And okay, so how does that align with where we would expect wave 2 to be? Are we going to see confluence? I don't know. Well, sure enough, we do see some confluence there with the smart tools. So based on this wave count, we're going to expect this correction to finish somewhere in here and drop back to here. So if maybe I'm a swing trader, maybe I want to trade this wave C. Maybe I want to wait for some confirmation here, and I'm going to hold this for some days to a couple of weeks, maybe a few weeks for the drop. If you're an even shorter term trader, you just repeat the process. We can look at this. Let's look at this on a 1 hour chart. So we see wave B is as ugly as wave B's tend to be. I've got waves hidden. And looks like wave B, if we were interested in the short-term trade here, well, it looks like wave B is almost done. So maybe if you're a scalper, you might try to catch the tail end of this wave B. But you may want to use this 1 hour chart to find, here's an example where we don't have confluence, where we have wave B is projected to end in this area, but based on the progress of wave B so far, we're going to expect it to get a little higher. So this is a wide range here. As they say, sometimes the best trade is no trade, depending on your style and your risk tolerance and your intuition and what you found success with. You may not see a trade here. I don't see a trade here. If I'm going to trade this, I'm going to wait for it to show some topping. Maybe we're going to an ending diagonal or something here, and then I'm going to look to trade wave C. But as I said, I don't trade this market, but that's how I would if I was. So this is the process that you apply to any market. We started at a weekly wave count. We got a sense of the overall picture. Then we went to a daily, then we went to a 60-minute, and you can keep doing that depending on how fast you like to trade. Do that all the way down to a 1 minute chart. So that is the overall process. Let me flip back to the slides to keep my thoughts straight. So I showed you in that example counting subwaves. You can do the same thing depending on your workflow preferences. You can do the same thing with the time frame drill down feature. I won't show that now. But time frame drill down allows you to actually, I'll show you an example of that in a minute. Well, let's take a quick look at that now. Let's jump into the market. Let me make sure I'm on the right track here. No, this is not. No, let's go back. Okay. I'll show you an example of where I use the time frame drill down, and as we get into some forecasts. So first forecast, I'm strongly bullish dollar peso. And we'll look at Tesla. Now, this is an example of where I've established on the left side here a long-term wave count context. And this is, if you go back to, if you want to, I'm going to talk about several of the markets I'm going to talk about now are markets that I've analyzed in previous Elliott Wave Hub events. And you can go back and look at those counts, but none of them have changed, which is notable. So what I am seeing here, and I cautiously trade Tesla. This is a kind of a funny stock because Elon Musk is kind of a funny guy, I guess. But so far, this count has been on track, and we see here we've got a 1-2, kind of a deep 2, but that it's an emotional stock, so it tends to overshoot standard probability areas consistently. We see that happen again here. We had our confluence area here looking for a wave 2 bottom, and it overshot. And this is again why I think it's really useful. One of the things that I have to say, this is kind of a personal gripe that I have, is people who think of all markets as the same, and they just, they're just not the same. These patterns Elliott wave patterns are consistent. But what I have learned, because I've been paying attention to the patterns, I've been paying attention and being able to quickly see Fibonacci levels in the context of Tesla, I just know that Tesla has a history of overshooting standard statistical levels. You got deep wave 2s. It just happens all the time. So when you know that kind of thing about a market, when you're familiar with how a market plays within the Elliott wave framework, it's extremely useful information. If you are just trading at whatever stock or list of stocks you find, you're just missing out on some of the beauty of the approach. So again, I tend to recommend that people pick a herd of a group or a herd of markets and trade them. And I don't trade a lot of markets, but I trade all the time. And one of the expressions I use is something is always setting up. It's just true. Something is always setting up. And just in my handful of markets, something's always setting up. If I want to trade, I just look at my crew of markets and see which one is setting up. So this is where I use the time frame drill down feature. And what the time frame drill down feature is useful for is helping you keep the long-term wave count context in focus. What we did with the dollar peso is zoom in, so it just didn't visually have a sense of where we were in the larger time frame context as we got down to the 1 hour chart. In this case, I kind of want to see where we are in the long-term wave count context at the same time as I'm looking at smaller time frame charts. So this circle here this is a daily chart on this side. Over here we have the 30-minute chart that is essentially this rally here. And let's see, did it happen again? Oh, it looks like a wave 2 that stopped where it, we would have expected it to statistically. And now we're rallying and what appears to be a new impulse. Let me clear some of this out in case it's too cluttered. And we see we have a 1, 2, 3, wave 3 hit where we would have expected it to. Looks like wave 4 is a little deep, but that's okay. We prefer it not to overlap, but since we're starting up in what could be a leading diagonal, some overlap here is okay. But based on this wave count, I'm now expecting wave 4 to finish up. If it's not already finished, then for us to rally up in wave 5 to complete the first one up. And for my style of trading, I trade Tesla and I own Tesla. If I wanted to trade Tesla, if I wanted to enter a new trade in Tesla, what I'd be looking for is this to complete 5 up and then drop back for a wave 2, and I'd get on board for wave 3 for a few weeks. Just again, in terms of using the patterns, refining your wave counts to the timeframes that match your objectives with how long you want to hold trades, and then planning planning your trades. As they say, plan your trade, trade your plan. And so I'll make a comment about how a lot of newer traders, or even people that have been trading for a long time, tend to wake up in the morning and say, okay, today I want to trade. Let me look at a wave count and see where, okay, now I want to trade. Well, markets aren't always ready for you to trade when you want to trade. And I don't recommend that you just trade on a whim. It's much more, you have a much more of an opportunity to succeed if you plan a trade based on expectations before you risk any capital. So, if I was really feeling aggressive, I might try to trade this wave 5. But since I'm not aggressive at the moment, I have other stuff going on that keeps me from being that aggressive in trading. If I'm interested in a Tesla trade, I'm going to wait. I'm going to plan it out, and I'm going to say if I see this wave 5 and then see the pullback that I expect, well, I'm psychologically forced to trade because it's just a beautiful setup. It did what I expected it to do, and then I enter my trade. I refer to this as let the market come to you. Don't chase markets. Let them come to you. These patterns are specifically designed to help you anticipate movements, not to act as a signal. We're not looking at only at moving average crossover. We're not looking at some indicator alignment to boom trade. This is not what Elliott Wave analysis is about. Elliott Wave analysis is about understanding how markets move, why they move, and using that information to anticipate what they're going to do next based on what you see them doing now. So plan your trade your plan, and let the market come to you. Don't chase it. So that's Tesla. Let's look at some other markets. So let's look at the Nasdaq, and first I'll start with the all-time history of the Nasdaq Composite Index. This goes back to 1971, I think. Yeah, 71. And just to establish I use this the Composite Index. I tend to do most of my more recent analysis on the futures, and I also use QQQ because I trade that. But I use the Composite Index because it gives us a full history of the Nasdaq. Futures started sometime later, sometime in the 90s. So it's more difficult to establish the true long-term wave count context. So this is my long-term Nasdaq count. And what do we see here? We're heading up in what appears to be a wave 5. Now, the top of wave 5 is off the chart. It's projected way up. I don't know exactly where. However, we are completing what appears to be a well structured internally in terms of statistical integrity. That wave 3 hit, we would have expected it. Wave 4, wave 5 overshot a little bit, and now we're finishing what looks to be 5 up in the Composite Index. Now, this 5 up, because we're in a wave 5, it could be the end of wave 5, which is not uncommon when you've had a long wave 3. We may not reach the typical wave 5 projection level. If we are going to, and we can see we got up into, we overshot the typical area, but because we did, we were informed that we were in a topping area, and sure enough, we were. Now, the question is in Nasdaq, what's going to happen next? A couple things can happen from here. Since we appear to have completed a wave 5, a 5-wave up from after 5 waves. We're expecting a 3-wave correction. We'll look at this more closely, but this has been kind of a funky drop that could count as 3 or 5. So that remains to be seen. But if this is going to, we have 2 options from here based on this wave count, based on the typical interpretation, mechanism, the thought process for interpreting wave counts. We would expect that either we have completed all of this 5 up, which would project a quite significant drop from here, or if wave 5 is going to continue to go up, we're going to expect this to be at the top of a wave 1, and I'll show you this more detailed in a minute. Then a wave 2, and then following up to complete this much higher wave 5. So now let's look at this zoomed in a little bit. So now this is the Nasdaq futures counting up from the 2022 low, just to see what that corresponds to. What we're doing is we're counting this on a daily chart using the futures. And this count I've shown several times in different LA Wave Hub events, and I think I talked about this at the last. At the last event in February, we were in here, and if you can see this posted on the website, what I was doing with a colleague of mine, trying out a strategy for day trading, anticipating we were in this area here or in here somewhere. Expecting that we were going to be topping in a wave 3 and that we were going to get this wave 4. I wanted to be on guard for it. And I was also just testing out a day trading strategy, how to repeatedly day trade these little drops without getting cut up, without losing money. And it worked out extremely well. We had several successful day trades in here until we finally got something that lasted more than a day. So where are we? According to this wave count, which is the count I've been tracking for months and months, we were expecting to top in this area here, and well, looks like we had hit some sort of top. Now, again, the same question is, and what is interesting here is that this drop, if it had broken the bottom of this wave 4, I would be looking down and I'd be shorting aggressively. But since it didn't, we don't know. We have completed what looks to be a 5-way move up. We can see our smart resistance area gave us a great clue that we were topping. We had already gotten out of the Elliott channel, so we were in don't buy here zone. Don't buy, potentially prepare to get short, and that was great information to have. Now counting down from here, just visually, well, I won't do it on this chart. I'm showing you a little bit of my personal process as it applies to Nasdaq. I look at 3 different charts, which might be strange, but it works for me. We have this drop. So the question is, what was this drop? Was it a 3-wave move? Was it a 5-wave move? Is this drop done and we're setting up to rally again, which could be some kind of ending diagonal or something based on the depth of the drop, or are we setting up to drop even further? So let's look at QQQ on a 15-minute chart. Coming down from this, now what we're looking at is on QQQ, what we're looking at, focusing on, is just this section here, since this local top, which could be more than just a local top, we'll see. Now we can count this as 5 down. It's not the prettiest 5 down you've ever seen, but it is valid. Then we have a bounce, which lately in this sort of stock market mania, most bounces have been getting up to the 786 area. So that hit, it's not a big question here. So it's not a this is a legitimate interpretation of the drop. We have 5 waves down, 3 waves up. However, what we have to be on alert for here is, well, it's possible that we could be now heading down on a wave 3, or this could also be an A, B, could be heading down in a wave C. But if so we can count this as either 3 up, or A, B, C up, or this could be a 1, 2, 3 up for setting up for 5. So it's kind of unclear. And one of the things we can do is let's apply a bias to this. We can see what that looks like. So if what I just showed you was counting this drop as 5 waves down, but it can also be counted as 3 waves down. It's not a clear structure. It's not only is it possible that it's a 3 waves down, but it's a 3 waves down that hit where wave C hit where we would have expected it to Now we would be in a 1, 2, 3. We would be expecting 4 somewhere in here, and then a continuation of the rally. Again, I'm not aggressive enough to get in the mix here and play around, but some shorter term traders might be. That's Nasdaq. Tesla. Let's take a look at silver. Now, silver is another one. I'm running short on time, so I'll speed myself up here. Silver is another chart that I've been presenting for a couple of years, since I think 2022. This time in 2022, the wave count is exactly the same. We have, nice alignment with probabilities in terms of support and resistance coming up, or in 2020 coming down, same thing. Great confluence here that gave us plenty of warning, or plenty of time to anticipate a bottoming here for wave 2. And we've continued up with really beautiful alignment with expected probabilities. Again, that's all these colored boxes show you: expected probabilities, confluence here. I've talked about this before, and now we're heading up in what looks to be an apparent wave 3 of 3. And we can also see that, if there was any question a few months ago whether or not we were going to confirm wave 3, well, that question has been answered. We're over the top of this long-term wave 1. We're heading up. So in silver, I'm expecting what you see here: strong bull market. One of the things I'd like to point out here is one of the things that you should be paying attention to is, if I was been expecting that wave 3 would top here and then drop for wave 4. But in order for this count to stay valid, this wave 4 could not get below this orange line. It could not overlap with wave 1. If that had happened, it would have provoked a re-examination of this whole section of the chart. I call this the challenge. It happens quite frequently where a wave 4 will challenge your assumption that this is a wave 3. It will come right up to the line. It didn't cross the line. It will come right up to the line and then reject it. I like to see that. Maybe I'm fantasizing that markets are alive, but they're not. But they are. They're living people who are doing this, and there's something going on with this challenge thing. That's just my little personal thing. So bullish silver. Typically, I've also I covered gold and silver before. Usually, I use the gold futures for gold, but I looked at our data, and a lot more people trade XAU USD than they do gold futures. So I'll use, and also at this point in time, XAU is the wave count is a bit more clear than the futures count. So same thing. We have from the low. I'm looking at what I'm most interested in is the long-term low. Same thing as silver. The most recent long-term low. Silver, I think it was 2019, was it 2020, and gold was 2015, 2016. So far we've headed up in 3-4 waves. Appear to be in wave 5. Now, here's where we would have expected wave 5 to terminate, and it appears that we are now in an extended wave 5. One of the things that I have noticed, because of these smart tools, because of constantly being able to see fib levels without trying, one of the things that I've noticed as a way to anticipate extended wave 5s is typically the wave 1 of the wave 5 will get to where we would expect wave 5 to finish, which is this box here. Then it will pull back and then start the extension. This happens over and over and over and over again. So knowing this, it's great to be alert here. Well, if you think that maybe we've completed the wave 5 and you want to start thinking short, maybe not. Maybe you should be on alert for what we have here is, a perfect ABC shot right in the middle of the support area, perfect confluence, and boom, here we go. So strongly bullish gold and silver at this point in time. We have 5 minutes. Let's look quickly. Let's look at Bitcoin. Bullish Bitcoin. Let me get some of these indicators off of here. They're not that interesting. I won't talk about how to use RSI and MACD in this presentation. Same thing. Well, not the same thing, but what I'm seeing here is from the 2022 low, which was a deep wave 2, according to this count. We headed up in apparently 3 waves, completed 4, and now we're heading up in wave 5 to complete wave 1 of 5. You know, I would call myself a pretty perma bull Bitcoin, but this is a solid count, and I think we have a lot more upside to see in Bitcoin and Ethereum. So that's all the time I have for markets. Let me hop back to final slide here. Let me see, have there any? Oh, let me see. I have a bunch of questions here. I'm terrible at monitoring the questions. Let's see. Somebody asked the smart fibs. These use logarithmic scaling. That's an excellent question. I've written a blog post that addresses exactly that. So you'll be interested in that. Please, Flora, can you post the link to the your Fibonacci's are probably wrong blog post? Let's see. Do you not use log? No, I don't use log in my charts. This is, you know, the calculations that we use at WaveBasis for Fibonacci retracements and extensions are different than any other platform I've seen. They are inherently consistent with logarithmic charts and linear charts. So you can look at logarithmic charts if you think it will help you visually to understand what's going on in the market, but you don't need to because you can trust the levels. So no, I don't look at logarithmic charts. Statistical levels was the Fibonacci levels. Well, I won't go into that. Somebody asked, can we integrate your tools with trading platforms like Ninja? Not yet, but we're working on it. And Jody Jody and I might be having a conversation one of these days about that too. Can we get alerts on confirmed wave counts? Yes, WaveBasis does include alerts for wave levels and so on and so forth. When can you remove the alternates? You can remove. You have total control over the wave patterns on the chart. They're not locked on, so you can move them. You can change them. You can do whatever you want if you think you have better ideas than the automatic count. So you're not limited to what is shown. So I think that's my time. But let me say thank you all for coming. Thanks for hearing me out. I hope this was helpful and informative. Come and try WaveBasis. We have a 14-day free trial. See if it works for you. And as a special thank you for coming to the event, we're offering a 20% discount for everybody who has attended. You can use this coupon code here, EW Hub 2024S. You can use that code to subscribe or upgrade anytime between now and October 1st. And as you see here, it's valid for monthly or annual plans. We're thrilled. I'm always thrilled. I love this stuff. Maybe that shows. I absolutely love it. And I'm always thrilled to be around other people who are interested in it too. So I'm thrilled to be a part of this community. And we at WaveBasis look forward to supporting you on your Elliott Wave journey. So thanks, everybody. Thank you, Jody.
Thank you, Stephen. FYI, I did use your WaveBasis charts in my presentation earlier.
Awesome.
Yeah. So great job.
Thank you.